Hey, everybody, welcome to this week's podcast. It's week 48, and today is March the 6th, 2026. As you guys can see, it's just me doing the podcast. This week, Mo is at the London Farm Show. The title for this week's podcast has to be about the Iran war. As you guys are aware, the war's been raging on, and today is day 7 of the war. And we'll talk about how that war has impacted commodities and what it means for commodity prices. Let's start, as we usually do, with the market price action over the last week. A lot of green on the screen as far as grains are concerned, and their crude oil higher as well, into new contract highs, and we'll spend some time on each of those commodities. Today's podcast is largely about what these commodities have done due to the war and the impact from the war. Corn up by about 12 cents for the week, and oats up by about 21 cents. New contract highs in soybeans and soy oil benefiting from higher crude oil prices, and also due to that optimism from the new U.S. biofuel policy. New highs for the current move higher for canola, all the 3 wheats, and like I was saying, crude oil up about $23 for the nearby contract, and in fact for the week as a whole, it's up by about, crude oil prices are up by about 35%, which is the biggest gain in futures trading in the history of futures trading of crude oil dating back to 1983. Looking at the other commodities, US dollar up, and US dollar has taken over from gold as a safe haven asset during this week. The stock markets, on the other hand, they're all in red. So it was not the greatest week for stock trading. Livestock, lean hog futures were lower for the week, but cattle higher. Let's get into what is happening in the Middle East. So this is an image that Mo pulled from, I believe, New York Post, and this actually is supposedly, if it is true, is supposedly of drones and missiles that Iran has been stockpiling in bunkers. And according to some rhetoric, they're saying that they're waiting for the right time to release a lot of these weapons and to counter the attack. So basically, last weekend, the U.S. and Israel did a joint attack on Iran, basically owing to Iran not agreeing to shutting down their nuclear program. And during the attack, a lot of the leadership in Iran were supposedly killed, including their supreme leader. And as of now, Iran is countering the U.S. attack by closing the Strait of Hormuz, which is a key transit point for a lot of those key commodities from the Middle East, including crude oil and natural gas, fertilizers as well, which is impacting global agriculture, especially during this time when farmers are deciding on spring planting. To get into specifics, basically the energy shock, or rather the energy supply shock, is roiling a lot of those markets. And we looked at the price action. So higher crude is supporting grains and is supporting soy oil. And as far as the Strait of Hormuz is concerned, the closure of that strait is mostly felt in Asia and Europe, which rely on the Strait of Hormuz staying open for transit of a lot of these key commodities. And we'll get into some of the direct effects of the closure on European commodities. About 13 million barrels per day of crude passed through the Strait of Hormuz last year, which accounts for about 31% of all seaborne crude oil movement. 20% of global LNG exports from the Persian Gulf is also at risk. and roughly 1/3 of global fertilizer supply comes from the Persian Gulf, and disruptions there are tightening availability of fertilizers, like I was saying, during this key time when spring planting is being decided upon. There is news that the U.S. Navy says there are no ships available for escort for the next 7 to 10 days. So the U.S. or Trump was promising that he would do his best to open up movement of ships through the Strait of Hormuz. And today there was headline news on CNBC that the Trump administration announced a $20 billion reinsurance program. So basically, insurance for vessels through the Strait of Hormuz was stopped because none of the insurers wanted to insure vessels during this war period. And the Trump administration supposedly is trying to restart that insurance. The U.S. International Development Finance Corporation will insure losses up to $20 billion on a rolling basis, but tankers are unlikely to start moving through the strait despite all of this unless we have more assurances regarding the safety of those tankers and the personnel. This week also a Kuwaiti tanker was targeted, and it was on fire and leaking oil in the Strait of Hormuz. So all of that just adds to the uncertainty and the fear regarding shipping through the strait. Each day, supposedly 15 million barrels of crude is being impacted, and that impacts also the sanctioned barrels. So basically, when supply is being removed from the market, it alleviates that glut of oil that was weighing on crude oil prices prior to this war breaking out. This here is the Dutch TTF natural gas chart, and that towards the right is the impact of the war on European natural gas. Following the breakout of the war during the first 2 days of the week, it was up by about 205%. In fact, if you look at the chart at a certain point, prices were almost double of what they were last week, towards the end of last week. And this parabolic move in crude oil, it's not close to its end yet. Today we had another leg higher, and basically, as you guys can see, crude oil gapped higher and is keeping on climbing. In fact, crude oil broke out of its recent downward sloping downtrend, and that too markedly higher from that downtrend. The message for and let's get into fertilizer as well. So the Middle East region and the Persian Gulf are key sources of fertilizer as well in terms of production and also in terms of transit. About 20 to 25% of global fertilizer production or supply is in jeopardy, and like I was saying, 1/3 of the transit of fertilizer as well is being impacted. And this here is the urea U.S. Gulf FOB prices, and up by about 203% since the April lows, and that in turn is also impacting corn prices, or the other way around as well. This here is the corn chart. So like I was saying, the war has impacted hard commodities and grains. Higher crude oil prices are also impacting corn through the ethanol route. In fact, it is also impacting soy oil, which is into new highs on the. So this here is soy oil, and this is a weekly chart. But as far as the contract is concerned, the nearby contract, it is into new record highs, or rather new contract highs. Higher energy prices means less meat demand, but it is bullish for grain prices in the next 3 to 4 months. A lot depends on how long this war carries on. But as of now, the trend as far as all these commodities is higher, and a lot of that has to do with the fact that we are not near ending the war. That strait has to be opened up. Unless we do that, a lot of these commodities are not able to go through and to transit. Canola also higher, owing to higher soy oil and owing to higher crude oil, and also due to that easing of tensions between Canada and China, and all of that is boosting canola. Canola is breaking out of that upward sloping uptrend, and which is bullish and should carry on. This here is the nearby soybean chart. May soybeans also benefiting from higher soy oil and generally the higher grains complex. Wheat higher as well, like I was saying. And in that initial chart, all the three wheats were sharply higher to close the week today, and which is refreshing to see as far as wheat is concerned. Wheat had been beaten down till about the end of last year, and now is putting together this recovery, which is taking on newer heights. This is Chicago May 2026 wheat. Also, guys, don't forget to follow our program, join the marketing club, make use of the app, which allows you to take and make marketing decisions on the go. This week, we spoke about, like I was saying, about the Iran war and what that means for fertilizers and for fuel, and what you guys should do. Basically, the underlying message is that don't go chasing these rising fertilizer and fuel markets. If you guys missed out on booking your fertilizer, don't book too much ahead right now, because these prices will be higher and will remain higher as long as this war lasts and as long as the Strait of Hormuz remains closed. And also subscribe to our channel. Hit the like icon for the podcast, please. This is a chart borrowed from Standard Grain, and the funds are spooked as far as grains are concerned and are fearful of going short the grains markets. In fact, the funds are buying into grains, and grains are working as a hedge against inflation. But the latest CPI and PPI numbers do not take into account energy prices, which means that the current spike in energy could add another 50 points to the inflation numbers. And what that means is that we could get support for these grain commodities from higher inflation, which should allow these grain commodities to stay afloat, stay buoyant for the near term. Like I was saying initially about the US dollar, this here is the US dollar. US dollar has taken over from gold as the safe haven asset, and it has been climbing. Safe haven gold prices were climbing prior to the Middle East attack, but and also there are prospects of or rather fading prospects of the interest rate cut, which means that inflation concerns intensified against the backdrop of a potentially prolonged Middle East conflict. Let's switch over to the livestock side of things. The Middle East war also threatens Brazilian beef exports, and as far as numbers are concerned, Brazilian beef exporters are worried because the Middle East is a destination for about 10% of Brazil's beef shipments, and Brazilian companies estimate 30 to 40% of shipments also pass through the Middle East before reaching markets in Southeast Asia and China. And the current closure of the strait and the war that is going on is making the situation for Brazilian beef extremely worrying. And in fact, there's nothing to do for these exporters. The big question is, does a lot of that, or at least some of that, some of those beef exports come northward into North America? Recently, Trump had opened up the U.S. beef market for Argentine beef. Does this then cause a reason for the U.S. to buy more Brazilian beef? The cost of shipping a single container from South America to the Middle East has tripled due to these war concerns. Also, in the U.S., Democrat lawmakers are preparing legislation aimed at breaking up U.S. Meatpacking companies as government efforts intensify to address record high beef prices. So Senate Minority Leader Chuck Schumer plans to introduce a bill in the coming days that would prevent companies from processing more than one type of meat. This proposed legislation could require major processors to spin off beef plants. This bill could also calls for a review of foreign-owned meat companies. So the three big meat companies being impacted are JBS, Smithfield, and Hong Kong-based WH Group. The legislation represents part of a broader effort by Schumer and Democrats to address affordability challenges for U.S. consumers. From there, let's touch upon weather, and this here is the latest U.S. drought monitor chart, and towards the left is the latest situation. And the map to the right is as of 2012, early July. So similarities as far as a recent map is concerned to the situation in early July 2012. As far as the drought readings, D to D4 currently are at 68.79, and that compares to 74.45 from July 2012. As far as the same time in 2012, which is early March, at that point, only 28.18% of the U.S. Midwest was in drought, but then as we went through spring and early summer, or late spring and early summer in 2012, that drought kept intensifying and kept creeping up, climbing. And eventually, we had that worrisome drought situation of 2012. We are already quite dry in the U.S. Midwest, although there are forecasts and some parts have been receiving rain. But does it alleviate a lot of this drought? Some of the drought would nonetheless would come under control, but not possibly the greatest start when we look at spring planting 2026. As far as Texas is concerned, drought is still at 98.89%, and that compares to 93.95% during the same time in 2012. In prior years, when we've had bad droughts, we've had drought creeping up from Texas and southeast of the U.S., which crept up into, in some cases, the whole of the Midwest, or otherwise parts of the Midwest, especially the ECB. And finally, as far as the market action is concerned, let's look at the CFTC, the latest numbers. So today we had CFTC release their latest numbers for the 3rd of March 2026. And as you guys can see there, some of the standouts are corn, and we have Minneapolis wheat there, which both flipped from net short to net long positions. In fact, all the grains barring Chicago wheat and Kansas wheat, the managed money funds were buying into the grains, also buying into hogs, whereas in cattle it was they were net sellers for the week alone, but does not change the story as far as the bullish nature of the cattle market as of now. On the soybean side of things, funds bought about 14,700 contracts, taking that net long position to 198,902. In corn, like I was saying, they bought a whopping 66,841 contracts, flipping from net short to net long 52,974. In canola, again, serious buying there, about 33,145 contracts, increasing that net length to 61,339. There was net selling in the current season also in Bitcoin. Finally, the saying for the week is it has to be the trend is your friend, at least in the near term. The trend as far as crude oil, the energy markets, natural gas, and the grains is higher. So don't stand in the way of the trend for now, at least. If you guys remember from that 2010 to 2012 period, and also during post-COVID 2020 to 2022, the trend was your friend in the grains markets. We had year-on-year highs, and eventually it capped off in 2012 and also in 2022. So, leaving you with that message. Follow the markets for now, follow the trend, and don't sell early. Let this play out. Let's see where, especially during this time where the markets also could come into play. But nonetheless, a lot depends on how long the war carries on. That's all I have for you guys today. I hope you guys have a great weekend, and catch you guys next week. Thanks. Bye.